Hello, my name is Triffany Hammond, and this is Drilling Down with Support and Resistance. What we're talking about in terms of drilling down in this context is starting with a larger time frame and drilling down to a smaller one, preferably the one that you like to trade, right? For me, that's going from the daily chart down to the 4-hour chart down to the 1-hour chart. If you are a short-term time frame type trader, that might be for you a 30-minute down to 15-minute down to a 5-minute chart. The whole idea is to take price in the time frame that you like to trade it and broaden the scope once and then twice to give you a broader view of where the market might be headed next. And what that does for you is it allows you a larger framework for you to do your planning for your trading and allows you to make your plan while you're calm, cool, and collected so that when the market does start to move, you're ready to go and you can pull the trigger without a lot of the emotions that are involved. So thanks for being here. I'm glad you could come today. I'm sorry about last week, but I'm glad to be back this week and back on our regular schedule. So let's get started. The buzz is all about the pound dollar, but certainly we could talk about really any currency against the dollar right now. We have seen really good retail numbers come out this week, and that's been the news that has really kind of driven the market into a high level of market confidence, right? Because what we're talking about is that final leg of recessionary pressure really needs to be driven by consumerism. It really has to come from people willing to spend their dollars, having the consumer having the confidence to spend its dollars. So the fact that numbers came out not only good, but much better than projected, has really allowed the market to find and hold on to those reasons for it to put on a trade again, sell those dollars to buy other currencies, right? Now, before we leave today, I want to make sure we talk about that yen because that's going to be super important. The shift in market sentiment overall is going to be super important for what the Japanese are trying to accomplish with their intervention ideas. But for now, we'll go ahead and talk about what everybody's talking about, and that's the pound dollar. What we have here on our daily chart, we see all of this indecision wrapped up in here, right? We had lots of reason to be fearful and doubtful, and that brought all of this back down to the dollar side of the trade. Not just fear and doubt, right? We actually have some inherent dollar weakness, which is kind of new to the marketplace. I mean, that's, certainly there have been times, but generally speaking, dollar strength has come from an unwillingness, a fear in the marketplace, right? And all during this up and down stage in here, we actually had times where the selling off of dollars during this consolidation was actually coming from inherent dollar weakness as the US dollar starts to struggle with its safe haven status. So what we're really starting to see, broad scope, I get asked the question all the time, how do you identify changing market conditions? And this is what we're seeing. We're starting to see the market toy with other safe haven currencies over the USD, particularly the Swiss. So what we're seeing today actually is kind of a reversion back to the old model that the market has used when there is enthusiasm, and that is just pure investment of the USD. And that's what we're seeing here on this pop-up here. On our daily chart, we had our big wide swing. We have a daily retracement level that we've been talking about, right? When the market left quite impulsively, very enthusiastically, did not go back and retest. So we have a really nice profit target up here at 1.5850. Well, to be a little more conservative, you'd probably maybe say 58.45, right? Just to be on the touch more conservative side. So that's a great place to start watching and to chop up any kind of upward movement. You take your movements up, let it retrace, take your movements up, let it retrace. And here's our broad scope view, right? We're looking at the daily chart. Why would we look so broad when we're talking about taking a trigger on a 1-hour chart? Because these levels are easily identified here. In the midst of this area of indecision, we can see as things really wrapped up, here was our broad swing, interim swing, and a real tightening up in here. This indecision down in here, the market is leading it, and we can see already at the top of this range, right about where price is where we can expect the market to kind of take a pause and see if there are any other buyers on board for the cable, right? So this is going to be a really great place for the market to either consolidate and wait for more buyers to come on board, or pull back, make that trade cheaper so they can start putting on the next leg of their trade. And we can really see those levels very well when we pull back our vision a little bit and see a larger time frame. So here we can identify a great place to start looking at as an interim profit target rather than just hold on and hope for the best, right? We can see a really good support and resistance level right in here at about 1.57 that's going to make a great place for us to put together a plan to get up to those next levels. As we move down to the 4-hour chart, we can see all of this indecision wrapped up in here, right? There could even be an argument for an upside down head and shoulders, but really what we have is just a lot of market insecurity, right? Not quite sure who's making the play and why through all of this irregular consolidation. And now that we've had this range be broken quite solidly with a large 4-hour candle, what we can see here is we have that opportunity, right? When we're talking about impulsive moves, right? This is a lot of market enthusiasm. The market's really excited right now that retail numbers came out strong. Really excited that this last leg of recovery could be fueled by these numbers, and then, each leg of that recovery would come after that, right? So we're seeing a lot of enthusiasm. So what happens when the now news becomes the old news? That's when we get these consolidation areas or pullbacks, right? A little pause in the marketplace. So this is the worst time when we see a huge candle in the midst of a large arch candle. This is the worst time to dive right into this trade. What we want to see is what's going to happen at the end of this 4-hour, because right now we're chasing it, and you'll see more of what that looks like on a 1-hour chart. When the candles are so big, they consume that next leg of the move. Because really, what we have here, if this was our larger box of indecision, and this is our smaller area of indecision, and this was our smallest area of indecision, what we have is the bulk of that sort of nested box trade. The bulk of that move is being taken up in, one fell swoop by the marketplace. That gets really exciting for us if we haven't already put together a plan for this trade, right? And we want to dive right in. Well, it's called chasing a trade, and it's a surefire way to lose a whole heck of a lot of money as the market starts taking profit after such a big infusion into the pound dollar. So here's what I'm doing, because a lot of this move has already been taken up. Look at these big impulsive candles. Here was a nice breakout candle. That might have been tough, seeing that it's right at the edge of that support and resistance zone. If you're watching a 1-hour instead of a 4-hour, you might have been in on this candle. That's a fairly good candle to get in on right there. But you recognize that depending on what you do with your stop, your risk to reward might be out of whack there. It may not have been a good trade. It wasn't for me. My risk to reward didn't make sense. It was too much, too fast for me to take the trade. So this is one that I'm sitting on my hands and waiting for a pullback, to be honest. But what we have here is this first push out, right? We want good sized bodies, not a lot of indecision on the wicks and shadows. And then that next move upward is right near that profit target, just the edge of the larger zone that is our support and resistance zone. With all this impulsiveness, what is likely to come next is a pullback at least to the top of this box here at about 1.55. That's going to be a fantastic place. It's going to be a really great place to get in on that bounce. It confirms this breakout. And then you can take a nice risk to reward up to that interim profit target we identified on the daily chart with a stop below the bouncing area, right? So we're already starting to see the slowdown. What's an alternate scenario? An alternate scenario is that we don't get a pullback with candles of indecision right along this boundary line in here, and then a fresh break northward. In which case we may not get as good a risk to reward scenario, but at least we're going to be pausing while the market's pausing and getting in when the market gets in. So let me see what there's for questions. We actually went through a lot there really, really quickly. Am I just speaking really fast today? I had my vitamin B complex and will charge to go. So let me see what we've got for questions on anything I just said there. Anything about the fundamental side of it. Why are people suddenly selling their dollars? Anything about the technical side of it? Nothing. Okay. Well, let's move on then. Say that again, what you didn't like about that entry bar. This entry bar is actually, this was the one here, this very first breakout of this really small area of indecision in here would have been a great place to get in, for me to get into this trade. I wasn't watching my charts. I was getting my kids ready for school. So I missed this one. Okay. This one would have been nice. It might have been a little bit scary to take because it does kind of nudge against the boundary of this larger yellow box here. Okay. By the time this one triggered here, again, nice bottom. We want to see good conviction in these candles. But by the time that one triggered, I felt as though I was chasing the trade, and maybe I'm a little too patient today and was willing to wait for it to pop back a little bit before driving upward. It didn't pop back at all. In fact, it just kept driving upward. And now that move, the bulk of that move is now nearly over. So if I don't get a good risk to reward on my entry candle, I don't take the trade, no matter my probability for hitting that top bar, because it's tough for me psychologically to manage a trade that I know the numbers aren't in my favor to begin with. Does that make sense? So even by the time this one triggered Oplo, the way I manage my stops is 1 minor support and resistance level, 2 minor support and resistance levels, and my stop goes down here. By that point, I have way more in my stop than I do in my profit target, and that puts the whole trade out of whack for me. Does that make sense? Does that make more sense? The way I manage my positions, I actually don't mind even taking a 1-to-1 type position on my very first position. I really don't mind that. But if I start getting into the 1.5-to-1 or 2-to-1 on the wrong side of that, then I'll just wait. I'll just wait. I've got no problem waiting. Adrian says maybe you can catch the trade if you're on a 15-minute chart. Well, that doesn't work for me, and maybe you can. And somebody on a 15-minute chart might be watching this slowdown. If we were drilling down from a 1 hour to a 30-minute to a 15-minute, well, let's just do that. Let's do that for fun. Let's say this was our broadest scope, and we're starting to see slowdown. We see impulsiveness, right? And we're seeing slowdown in here. We see an area. I'm going to switch these lines on you. We see an area here that got left and didn't get retouched. And we see an area here that got left and didn't get retouched, right? So we have a couple of places to start watching for that counter trend trade. On our 30-minute, what we're going to start watching for is some sort of candle pattern that is giving some clue that the market's going to take profit on this trade, because that's what's really likely. Big moves like that, people want to take their profit and wait to see if there's other buyers on board. That's just the way the market works. So we're going to start watching for some of that profit target if we're a 15-minute, or profit taking if we're a 15-minute trader, right? Something that goes on in here, some small body, long wick with a confirmation candle that closes below that small body. On a 15-minute candle or on a 15-minute chart, whatever that little area of indecision becomes, we're going to watch for a break above or close below. It's really that simple. If we're watching for a close below, we're going to target either the 1.55 level or the 1.5460 level, depending on our experience as a 15-minute trader and what our preferences are for being more conservative or more aggressive during times of impulsive movement, right? And I say that because, really what we're talking about is I'm not a 15-minute trader. 1 hour, 4 hour daily. And I've actually had to, 1 hour has really been a draw for me to try to pull down to a shorter time frame. And I'm still testing the shorter time frames. I'm still working on, being better and better at being a smaller time frame trader. But I know what I'm good at, and I kind of stick there. I kind of stick in my 1 hour, 4 hour daily chart. But if you're a 15-minute trader, you have a whole separate frame of reference for 15-minute activity than someone who trades for a 1 hour time frame. So when I say something like based on your experience as a 15-minute trader, I really mean based on your experience, not based on your presumptions or based on your hopes or based on, some sort of broad-based theory. I'm talking about practical experience that you put into use as a 15-minute trader. I really do not advise, if you are looking at a 1 hour chart day after day after day, and this is really where you've gotten good. It's never my advice ever to go, oh, well, if I catch it on a 15-minute chart, I can play the pullback and the bounce. Just suddenly out of the blue. If you've developed that over time and you've gotten good at that, then that's one thing. But I really strongly suggest you get good at one pair, one time frame, one trading session first, right? Because you have to really become an expert at one thing first before you can start playing with those nuances. Donnie says the pound economy is shaping up. U.S. economy is still unsure. Attraction to USD has been risk aversion until now. Yeah, and even in terms of risk aversion, it's losing its attraction. To be honest, the U.S. dollar is really kind of losing face abroad because it's just not as sure a thing as it once was, right? Even though we're still the largest economy in the world and all of that, I think everyone was kind of hoping that the U.S. would be the first economy out of the out of the trenches, right? And it's so big. How do you turn around the Titanic in time, right? It's just this huge machine. And yes, you're absolutely right. The British pound, or the British economy, is getting its legs much faster than the U.S. Absolutely. Good. Wonderful. Excellent comments. Excellent questions. Thank you. Anything else then before we move on? Because I really do want to make sure we talk about that yen. I think that's going to be the big issue that's coming up next in terms of what everybody's talking about. All right, I'm going to unshare the chart. You won't see it for a little while, and then reshare the chart. We'll be looking at the dollar yen daily chart. Okay, just confirm for me real quick that you can see that. Sometimes some people have problems. It kind of chops off the edges and such. Someone just give me a Y. Yes, I can see it. Don't be shy. Thank you, Harley. Thank you, Ash. Okay. So here we're looking at the dollar yen. And last week we actually talked about the yen and the Japanese plan for intervention. And Prime Minister Khan has been reelected, so there's stability going on there. We're going to be hearing more and more about their plans to intervene and purposefully weaken their currency, right? Because Japan really needs their exports to be affordable to the rest of the world in order for their economy to thrive, because they're very export driven, so much more so than most other economies. So seeing their currency this strong against the U.S. dollar is a very scary prospect for them. This is not where they want to be. And truthfully, for the last year, they've been trying to verbally intervene for a very long time. But it's only going to go so far. And they've stepped that up somewhat here in terms of verbal intervention. They're not really being open about the plan, right? We've seen a couple of different ideas for what they might do. The whole idea is that what they want the marketplace to do is, in this case, sell the rumor, buy the fact. They want their threat to be enough to weaken the currency while other economies have a chance to strengthen. Because whatever they do to intervene is going to be fairly meaningless unless they have strong economies on the other side of their trade. Because no matter what they do to make their goods affordable, if people aren't buying goods at all, it doesn't do anybody, that trade just doesn't happen, right? There's no, if people aren't buying, no matter how inexpensive the goods are. So, not to mention the fact that with, the last year and a half to 2 years of just constant stimulus from all economies across the world, if everyone's flooding the market with supply of their currency, then Japan's just jumping on board. I mean, it loses the supply and demand side of what they're trying to accomplish by increasing supply. So, the fact that today's numbers came out and really gave a good boost to the market makers' confidence in the global recession recovery efforts might be what Japan is really needing, really hoping for, to fuel the other side of what they need to have happen if they weaken their currency. Not if, when they try to. I mean, that they have to. So what we can see here, even if we didn't know any of the fundamentals going on with the Japanese yen, we had no idea what was going on there. Even on a daily chart, we can really see, look at this. These are our wide swings, interim swings, and look at how long this downward push has been really, really tight. So we're seeing that even though this is moving downward, that range is tightening up. That's sort of a divergence of sorts, right? Because we're losing enthusiasm for the sell side. Now, rumor has it, China is actually responsible for buying a lot of these yen lately. So, one possibility is if China doesn't back down and China says, no, we're going to continue to buy yen as a part of our diversification, then they've really bound Japan's hands, to be honest. And that could fuel a whole fresh sell-off of the Japanese yen. However, with the good news today and with some intervening and relations going on with China, what we may see even by the end of this week or the beginning of next week is some rebound activity coming up off of here. What I expect this will look like is while things are kind of going goofy with China, while they're kind of negotiating what they're going to do with all of this money diving into the yen, this may be a little pop down off of this last support, this last tightening up right in here, and then we could get a nice little head and shoulders as a sign of a much larger reversal. On this pair. And to be honest, that's my bias. That's what I'm watching for, especially since the market's got reason to be confident. Remember, we keep talking about in the watchlist webinars I do on Mondays and Wednesdays, as well as in these webinars every Tuesday, is we keep talking about the fact that the market really wants to be confident, that market wants reasons to trade. And every time there's a huge fearful type injection into the marketplace, there's that pause, and then the market sort of cherry picks the good news and tries really hard to make that be the driving force behind its decisions until some other big thing blows up again, right? So we're kind of at that phase again where I'm looking for the market to start to cherry pick good news, because the market wants trade to be strong. The market wants recovery efforts to be in there. They want their carry trade back too. I mean, granted, that's not going to be a safe bet for a long time, but we need to start watching for those market makers to start driving trades in the direction of market confidence. So that's what I'm thinking will happen on the dollar yen. However, that's a longer term projection. We're talking about a daily chart. I just really felt like that was important to talk about, even above and beyond the support and resistance stuff we talk about in this webinar. Just kind of wrapping our heads around some of the fundamentals that drive this engine. Okay. So what I've just done here, while I just kept blithering away, was add on support and resistance zones. Now, these are really easy to identify in terms of at least the general area, right? When we're talking about support and resistance, we're always talking about a zone. It's very difficult to get a specific line in the sand, a very pinpointed price point that is the place where the market stops, especially in Forex, where we just have so much volume. But we can see here where we have our areas of indecision. Now, what can really kind of confound some people sometimes is the fact that I was willing to sort of take the middle range of these bodies and these shadows, and it cuts off these bodies. And what can make support and resistance trading tricky for people is they want definitive answers. Why wouldn't I put the line here? Why wouldn't I put the line down here? Why choose that one? Why put it where I put it? For me, it's a matter of, again, like I talked about earlier, just personal experience. I usually have a tendency to cut the difference between the extremes of that muddy zone that happens when price has tried to stop at a price point and couldn't quite do it. But for you, it's going to be a matter of doing the work, putting in the hours, and really identifying what your personal preferences are. Do you like the absolute extremes, or do you cut the difference? Or do you like the more conservative and stick with the bodies and forget the wicks? So it really depends on your own personal preferences. But by identifying at least a general price point and putting some lines on the chart, when I move down to my next time frame, now I have a place to identify as a likely spot for the market to pause should it go one direction or the other. What do I do in terms of, when we're past the lows, right? Where do we go next? If you liked the trend side of this trade and you thought China was going to just keep buying yen because that's what they want to do, where to go next? We don't have lows beyond where we're at. So what comes next? This really becomes the difficult place to try to negotiate profit targets and things. We have an absolute low down here at around 79.80, and we have an interim low at this wick down here at 81.90. So you could put those on, but really, since it's been so long, 16 years since we've been at those lows, what I like to do, stretch that out again. What I like to do in situations like this, and it doesn't happen that often, you're very rarely at the extremes anyway, is I grab my range and I go for the 200% extension level. That little 200 on there is 200%. And what that does for me is it's saying if the market was willing to move this range the last time it showed indecision, then it's likely to be able to move that range again before it shows indecision. And that's really all it is. If you're more conservative, you're going to go for that 161.8. It's a much higher probability profit target. Nothing fancy about those fibs, just a cheater way to measure those levels. Okay, moving down to the 4-hour chart. On our forward chart, we can see we're definitely in this section. This section right here on the daily chart, which was our downtrend. Let's highlight it. We're in the context of that tight little downtrend, and we're starting to see, every time this nudges down, even on a 4-hour chart, on a volatile pair, you can see we've got small bodies, they're undecided a little bit. They're not moving with a whole lot of conviction. They're just sort of nudging out. Those are not my favorite trading conditions. That is what starts to trigger the thought in my mind that we might be heading toward a more of an upside down head and shoulders situation, because these aren't happening with conviction. What has happened here is that we've broken a significant level of support in here at about 83.75. And we've got somewhat of a steady push in here, but our bodies are getting smaller. And at the very least, whether this reverses into an upside down head and shoulders or continues on or not, what I can expect after this little kind of fizzling out, this dwindling of enthusiasm to the short side, which wasn't really much, very high enthusiasm in the first place, is that this is likely to come back and retest this area, at which point I'm willing to go long above or short below. Whatever that little area of indecision is up against this little neckline in here, that's the place for me to make my decision, because it's either going to confirm that downward movement with a bounce downward, or it's going to reject this break southward and give us a fresh consolidation and a move upward. Does that make sense? With that in mind, I like this price point at 83.75. I'm going to watch this price action on a 1-hour chart. And you can see in here all of that indecision. This breakout candle actually was pretty nice and decided. It did retest, had a nice, fairly well decided candle here. But then we started to get some really crazy whipsaw action in here. And now we're getting small bodies, long wicks. It's a really good time for the market just to show lots of indecision and for us to put our trading plan together. Our trading plan. There we go. I'll spit it out. This is likely to be the little area of indecision, right? So, for Adrian, who likes the 15-minute chart, he's probably going to watch for the bounce up out of here and play that reversal. Or perhaps a close below and look for a continuation of this downtrend. Okay, again, lots and lots of information in there. Tons of stuff, fundamental, technical, support and resistance, head and shoulders, long wicks, short bodies. Any questions for me? Confusions, things you'd like me to clarify or repeat? Yes, Adrian, very good. There are also inside candles right now. That's absolutely right. Absolutely right. Inside candles, remember, it's just kind of that same triangulation that we talk about every week. And you want to keep in mind that those inside candles behave a little differently as you go shorter and shorter in your time frame. They can just as easily be a continuation as a reversal. So, proceed with caution. I mean, they're a great signal, and really what they're telling you is the market slowing down and showing indecision. That's really the takeaway there. Your responsibility as Forex traders is to be able to read the story going on in price. That's why in these webinars I have no other indicator. I have nothing on my charts because I really want you to wrap your head around what's going on in the context of these candles, right? Long bodies show enthusiasm. Bodies that are too long show over-enthusiasm and a likelihood for correction, right? Bodies that are short show indecision. I don't care what color they are. If they're small bodies, they're undecided. The market's really bouncing around a tight little price point. If we're seeing long wicks, we're seeing a tug of war go on between buyers and sellers. We don't want to get caught up in that. We don't want to, be in the middle of that if we can avoid it. So once you can start to understand the story being told in price, then you can start to understand better the only real-time indicator you have and put your plan together and trade better in the long run. So let's see. Sad says, I just bought yen. What do you think about this trade and the stop of 82.90? Well, I don't know what your trading system is, hon. I would love to help you, but I don't know the impetus for you to buy yen. I don't know if the big thing I'm going to tell you is if you follow the rules of your trading system, then you've taken a good trade. That's great. That's fine. If you've impulsively got in there because of something you read, something you said, I said, something you heard, someone else got into it, then you might want to get out and figure out what your actual plan is. And I don't mean to be evasive here. I want to be perfectly honest with you. A while back, I did a webinar here at FX Street about the importance of really owning your system. What I do as a teacher to people is I really encourage you to develop your own system. I don't even care if you start with some of the things that I teach and some of the ways that I trade. That's fine. You have to have a jumping off point, and it's not about this is my system, go make your own. That's not it at all. If you start off with the framework of someone else's system, that's perfect. That's great. But you have to understand that that is simply a framework, that the person who developed that system did so over years and years, and they are, without even knowing it, when they are applying their system, they are applying the intrinsic learning that happened throughout the process of them developing that system. There are little things that they do that you're not going to do simply because you don't have the expertise that they have. And what's really important for you to recognize when you're working on your own trading system is that you really do have to make it your own. You have to look at thousands and thousands of trades. You have to be able to take paper trades in live conditions and hone it and be willing to go back and make the necessary changes to your testing and the experience that you're developing it. And when you do go to live money, you have to be willing to start with a small amount while you test your ability to trade your system with real money. Okay? That's the process. I'm sorry, there's no getting around it. I don't care if you buy bots, and I don't care if you go to somebody's sure thing. You have to develop your own system. You have to know why you're getting into a trade and why you're getting out of a trade. It's super, super important. And it really shouldn't matter if I think it's a good trade or not, because if it's a trade that you took according to the rules of your trading system, it's a good trade. What if it loses? I don't care. It was still a good trade because you took it according to your rules. Okay? That is, I just cannot impress that upon you enough. You have to own your system. DRSS says, to my understanding, China is a developing country and Japan is a developed country. Hence, their currency is considered as a major. Can a developing country control the currency of a developed country? Absolutely, yes, because right now China has the ability to buy whatever currency they want to, whether the developed or developing. That's a good point you're making there. But absolutely, because it really comes down to who's buying the yen. And this is actually just a recent kind of discovery that China sort of came in and has decided all of a sudden in the wake of Japan trying so hard to weaken its currency, that China says, well, you know what, actually we want to buy a whole bunch of this. If they've got the money to buy it, it's going to drive price, and it will affect their currency, and overall it will affect their economy. And, I don't know, maybe that's the plan. Maybe that's the whole idea. I don't know. But I do know that absolutely, yes, whoever's got the money kind of runs the show. And that's pretty much true across the board, isn't it? What type of orders do you use, market, stop, or limit? I just use market orders when I get in. And then, of course I use stops and limits on my trades. But I don't use them as pending orders to get into a trade. Yeah, Harley says that China's buying the yen. Exactly. China's buying yen, and they've got the money to do it. Yeah, you're so welcome. I'm glad to answer these questions. Good questions. It's hard sometimes to wrap our head around, what's really going on with currencies. It seems like it should be so easy when we first come in. Okay, if the pound has good economic reports, the pound should strengthen, right? The dollar has good economic reports, the dollar should strengthen. No. And once you start kind of developing, a sense of the layers that go into the fundamental analysis, risk aversion and political games that are played between economies and, all of these things that kind of happen, you recognize that it's really not a cut and dry issue. It's never a cut and dry issue, is it? And then there's times things just jump and you go, what happened? I don't know. So, yeah, these are good discussions to have, though, really good discussions. I have about 6 more minutes. Is there anything else you guys want to talk about? We could maybe shove in a quick currency, or we could talk about anything. Harley says that's why it's better to wait for numbers to come out and see how the market reacts, especially big ones. NFP is a big one. GDP actually over the summer was pretty market moving. And then we've had our surprises, right? Like housing numbers and retail numbers. Although, as I said, as we come into this recovery leg, it's this last leg of the recovery being so reliant on consumerism. I guess it's not really that surprising that housing and retail numbers are really important. Jerry says that the dollar yen has a very negative MACD. Maybe. I don't have one up on the chart right now, but. And then there again, that depends on your settings, right? What about the dollar Swiss? Yeah, let's take it. No, Harley, I don't trade the peso. Nope, I don't. Okay, so I'm going to unshare the chart, so don't panic. I'll be back. And let's take a look at a dollar Swiss. Where's my dollar Swiss? There it is. We'll move it out to the daily chart and reshare. Oh, so that asks a good question. Where can we find a record of volumes for any pair? Volumes are tricky. Most of the volume numbers come off of options, which isn't, you can't, there's so much volume in Forex. There's not really an accurate indicator. And those indicators that are kind of comprised of options, volume, and time of day, and they're all sort of fuzzy and sketchy. So that's why you don't really see volume on people's charts, because even if you can get something on there, it's fairly meaningless, because you're talking billions and trillions of dollars, and crossover from markets and times, and yeah, that's just not something you're really going to see. Adrian says, but the market moves 80% before big news by days and anticipates it. A lot of the moves can be priced in, yes. And when you can see kind of an alignment, now this isn't, what you're saying, Adrian, is true. However, it has been really a tricky thing to try to trade the fundamental forecast before the announcement over these last 15 to 18 months, simply because the dynamics of the forecast have changed so much. There was a time, if the market was on board and all of the indicators and signals aligned, and I'm talking about fundamental indicators, right? So, you see good manufacturing numbers, you're going to see good GDP numbers. Generally, that is where those forecasts come from in the first place, and that's why that pricing in was so effective for so long. However, that has really decoupled. That doesn't really necessarily happen a lot, at least not with the same level of accuracy it once had. So that whole pricing in ahead of the announcement, that effectiveness has sort of, or that style of trading has sort of lost its effectiveness in the context of economic upheaval. So while I do agree with you, often the news is priced in early, I discourage you using that as a trading method under these conditions. Yes, yeah, see, there we go. Yeah, Harley mentioned that as well. So Alex says, so what is your common approach? What sort of setups do you use? Trend following, swing and channel, breakout? I'm more of a breakout trader. I actually don't mind going, I prefer trend. I prefer going to the trend side of the trade. But I'll take the counter trend side if it sets up nicely. But I really like to watch for that tightening up, and then I like the breakout. That's the best way I can explain that. But I'll take, a continuation of a trend even without the tightening up, as things level off and break out again, level off and break out. I'll take those two. My big thing is what I look for in terms of my trading system is I look for those pauses in the market, and I take advantage of those pauses in the market and then look for the breakout of those pauses. Okay, so let's quickly take a look at the dollar Swiss, which is, you can see here, really flirting with old lows. Actually, I'm going to go out to the weekly chart because it's important you recognize the context of where price is right now, even on the dollar Swiss. Now remember, if the dollar Swiss is actually going to sort of take over as the primary safe haven currency in the world, which seems likely to me at this point, then what we really have here is a very significant boundary that once broken could really continue to trend for a very, very long time. But we don't know that yet, and that's the kind of transition that could take months and months to hash out. So what we want to look for more so, as opposed to making that assumption, is we want to look for whatever happens along these lows. And actually, it's broken. Let's see, I'm going to tighten that up. Again, I'm cutting the difference between these bodies and these wicks. We can see already that it's sort of very similar to the dollar yen, flirting with almost an upside down head and shoulders after all of this fizzling out. in here. Let's mark off these areas that got left impulsively because these become important possibilities for profit targets. Mark that off there, and I thought I saw another one. Oh, it's not showing my descriptions. There we go. And we have actually one that's even closer right in here that I'm going to mark as well. All right. So now we have our levels marked. We can start to watch for the behavior on our 4-hour chart that could indicate a time for the marks to pause. You can see right now it's not pausing. This would be a fresh breakout. If you're truly a trend trader and this is hardly gave pause at all actually, and it's breaking southward, you'd be watching for this candle to close to get into a short trade on this, right? Here was the last level of support and resistance. It left, did not get retouched. Going to go ahead and just mark that as well. And I'm very quickly running out of time here, so let's just do a quick analysis on a 1-hour chart. Nice candle close here. We're already seeing some pause. So if you got in this short, if you were watching this as a breakout from this area of indecision right in here, and gosh, even lower than our 4-hour, we have a 1-hour retracement level. Just going to type in 1 hour for now. If you got in right now, this is what makes trading so scary, right? Because after big moves, there's either pauses or pullbacks, right? This is what makes that so tricky. And how do you know if it's a pullback or if you were just wrong, right? And this, again, experience. But we can start to see this pause, this little area of indecision, not too different from this pause or from this pause, right? The market pauses. That's what it does. But what we can see here is that, maybe somebody who likes the 15-minute chart is going to be watching for this pullback in here. Somebody who's already in this on a 1-hour chart is going to wait for this to finish pausing, even maybe pull back to here and will look for the bounce to start adding on to this trade, right? These are the possibilities that are going on in here. For the Swiss, this was actually a fairly impulsive move. So another possibility is that we're looking for an upside down head and shoulders. How would you know if this trade was just wrong on a short? A close above this neckline right in here would definitely confirm that this was an impulsive fake out, not a breakout. And that would tell you you're wrong. And if that is the second, here's our first support, minor support and resistance level. Here's the second minor support and resistance level. My stop always goes a little bit beyond that. And this is why, because that's how I know when I'm wrong. Oh my gosh, lots of questions I'm missing. Holy cow, let's see. Guys, is not forgetting the funky consolidation yet. I had in my watch list updates this morning. The funky consolidation on that. You're funny. Oh, yes, how to show description on the chart. You right click, you go to properties, and then you mark on there's your colors tab, your common tab, and that bottom box says show object descriptions. And you can mark anything, which is really cool. So you can do rectangle yeah, and you can do here. So I don't know. It's not a head and shoulders. I know that, but actually, look at that. It is over here. But the box itself doesn't grab a head and shoulders. You can mark the box too. So you can mark anything, which is kind of cool. Okay. So I am out of time. I want to thank you guys so much for being here. If you're a student of mine, we've got our watch list webinar tomorrow. If you're not a student of mine and you want to be, you can find me at, let me put it up here, www.triffx.com. The blog is free. Come hang out if you want. The webinars are free. Trading Psychology article on Thursdays are free. What I do though, in terms of the classes that I teach, they're small group 10-week classes where I help you develop your own system. I go over your testing. I give you suggestions. I get to know you personally and help you identify your own hang-ups, the things that make you scared, the things that make you overconfident, and help you find ways to trade around all of those little things that are secretly driving your trading that fall outside of system-based plan, right? So I hope you'll consider that. The next one starts in late October. You can come take a look at that at the website as well, or certainly email me with questions at Triffany, remember the R, at triffsx.com. Oh, yes. Thank you, Maud. And if you are coming to the International Trading Conference, I'm going to be there. I'm completely stoked. This is a one-of-a-kind conference where you actually get to trade live with people and see exactly how they're taking their trades. I'm one of those people. So all of you that are like, yeah, but what do you do when? Yeah, but how do you do? You'll get to see what I do. And if you come to my website and look under the trainings or the special content section, you will find a discount code for the International Trading Conference. So come take a look at that as well. Thank you so much for bringing that up, Maud. Absolutely. I'm happy to extend that to all of you wonderful people. So come check it out. You guys, please be really good to yourselves. Take time in your learning process. Be sweet to yourselves as you make mistakes and fumble and try to find your way. And I hopefully will see you next week, Tuesday at noon Eastern Daylight Time. Or if you are a student of mine, I will see you tomorrow at 8 a.m. Eastern Daylight Time for the Watch List webinar. Thank you, everybody. Take good care of yourselves, and I'll see you next time. Bye-bye.